Assalamu alaikum, everyone. Good afternoon. Thank you for joining us for this MSX information session on the H1 results for the current year 2025. As usual, we'll just start with a very brief overview of the company. As everyone's aware, the company was established back in 1987 and is currently one of the largest listed investment companies in Oman, with an investment book of 204 million riyal as of the end of June. We hold investments in a number of sectors, most notably banking, financial services, and insurance, with positions in FMCG, manufacturing, utility, and hospitality companies as well. Our major investments are Bank Dhofar, Dhofar Insurance, OIFC, and Dhofar Food and Investment. Our major shareholders include prominent business groups such as Muscat Overseas Group, Militant Trading, and contracting company FinCorp Investments, in addition to government pension funds such as the SPF. Many of these investments are promoter shareholders. Our board is composed of 9 members, with highly experienced members sitting, chaired by Sheikh Khalid Al-Mashani, and with the deputy chairman being Mr. Tariq Al-Ajeli. The key management personnel sitting around this table are myself, Ramz Al-Amoudi, on my right, Vishal Makwana, and on my left, Jamal Kamel Rashid. With respect to our investment philosophy and approach, our objectives have not changed over the history of the company, where we generally invest in equity instruments issued by companies in the selected areas of focus. Such areas change from time to time, but as a lot of people note, we are not heavy traders and speculators. We are value investors, and as such, we tend to hold our investments for a significant period of time. We stand always prepared to invest in opportunities outside of Oman, with a limit of 10% on the overall portfolio placed on that. This kind of asset allocation is regularly reviewed and approved by our board. With respect to the investment process, our investments and plans are devised by management. They are taken up to our executive and nominations committee for approval, and then pushed up to the board for final approval and implementation. The ENRC is mandated with following up the actions regarding the investments and the status of each investment. When it comes to risk management, we generally apply a scenario analysis framework, and the risk tolerance is assessed by asset class, where a maximum loss is determined for each asset class, and action is taken before such loss is achieved. The main components of our investment portfolio, we've divided them into separate investment categories. We own 3 subsidiaries with a total value of slightly more than 500,000 riyal. Our largest segment of our portfolio consists of our investment in associates, with a total value of 176 million in terms of carrying value, 112 million with respect to market value. The largest of those are Bank Dhofar, Dhofar Insurance, OIFC, and financial services company. We also own a significant stake in Dhofar Food and Investment, and in an unlisted entity, Salalah Medical Supplies. Our investment in equities portfolio is mostly composed of MSX listed assets, with a total value of slightly less than 25 million as of June. The biggest components of that portfolio are Bank Muscat and Salalah Port Services, with some other minor investments in other equities. With respect to fixed income and other investments, we currently only have a loan to one of our subsidiaries of an amount of 3.6 million riyal. Little information on our key associates. So our investment in Bank Dhofar is valued at 135 million riyal, where we own slightly more than 23% in the bank. As everyone knows, Bank Dhofar is one of the largest commercial banks in Oman in terms of asset size, established back in 1990, so it has more than 30 years of experience. It operates one of the largest networks of branches in Oman, with 118 branches. Total assets of 5.3 billion and shareholders' equity of 581 million with a market cap of 392 million. As many of you would have noted, the share price of Bank Dhofar has been on the decline in recent months as a result of the inclusion in the MSX 30 index of some of the OQ listed entities that have pushed Bank Dhofar out of the index. As a result, there has been a slight drop in price. We expect that share price to recover over the coming few weeks and months. Our second important associate is our investment in Dhofar Insurance, where we hold slightly more than 39% and is valued at 16.3 million riyal. Of course, Dhofar Insurance Company reports the second largest insurance GWP in Oman, but if we look at Oman only GWP, it actually comes out on top in the market, and that has been the case for the past 2 or 3 years. It's also the most profitable insurance company in Oman. That has been the case over the past couple of years. It's a long-established company back in 1989, and also has one of the largest networks of branches in the Sultanate with 42 branches. Total revenue for 6 months amounted to 45.7 million, with a total asset base of 132.4 million riyals. Our erstwhile associate, OIFC, with which we have merged effective 1st of July. As of the 30th of June, right before the merger, we had slightly less than 38% of OIFC and carried that investment at a value of 14.1 million. As everybody knows, OIFC is one of the leading service companies in Oman when it comes to billing and collections. It's an old established company back in 1979 and is also one of the largest shareholders in Bank Sohar, owning a 13% stake in that bank. It has a total investment book of 128 million riyal and has shareholders' equity of 38 million as of 30th of June with a market cap of 21 million. Just a side comment on here, the company has the company's shares have ceased trading. They have actually, shareholders in OIFC have been given shares in DIDIC as of the 1st of July at the swap ratio that was agreed in the merger process of 0.348. And the share value and share movement in Dhofar's in our own shares reflect this change. With respect to DFI is a food and beverage FMCG manufacturer based in Salalah, where we hold a stake of close to 27%, and carry that investment at a value of 7.4. It's an old established company back in 1984, and it is engaged in the production of multiple food products, most notably dairy, fresh juice, poultry, animal feed, and trades in oil as well through one of its subsidiaries. It has 3 subsidiaries, mostly the Dhofar Poultry Company, Oman Gulf Food Company, and a plastic manufacturing entity that provides the packaging or the majority of the packaging for the group. It had total group revenue of 52 million as of for the first 6 months of the year, with a total asset base of 81 million riyal, and has a market cap of 14.6 million riyal as of 30th of June. A quick look on our first 6 months profit and loss statement. As you would note, our total income has increased from 598,000 in the first half of 24 to 1.6 million in the first half of 25, with the major change being the reversal of the unrealized losses that were recorded in the first half of 24 to a slight unrealized gain in the first half of 25. There has been a slight increase in expenses, including depreciation, resulting in operating profit of 417,000 in the first half of the year. Finance costs are essentially flat as a result of the change in interest rates, or the slight increase in the interest rate on fixed deposits in Oman, to which our lending rate is linked. Our share of profit as associates has gone up by about 500,000 riyal. Most of our associates are doing better than they did before, and that obviously has a direct impact on our own profitability. So as a result, we are showing an increase in profits before tax from 3.9 million in the first half of the last year to 5.4 million in the first half of this year. There has been a slight increase in other comprehensive loss. A lot of that comes from the way accounts are treated in our associates, which seep into our own accounts. However, the total comprehensive profit is still more than R1 million higher than what we achieved in the first half of last year, with 4.65 billion total comprehensive profit achieved in the first half of 25. Total assets have gone up slightly by about 5 million, from 221 to 226.6. And our equity has gone up, reflecting the profitability of the company from 134 million to 141 million riyal. Our liabilities, or loans and borrowings, are slightly lower than they were last year, so standing at 85.2 as opposed to 86.3 as a result of repayment of certain debts. Just a graphic representation of the profit and loss account. As you can see, our total income has increased by 174%, whereas our share of profits from associates have increased by 8%. Those increases more than offset the 19% increase in operating expenses, resulting in the increased profitability. If we take a look at the table on the right side of the screen, you will note the share of profits from associates book between in the first half of 24 versus the first half of 25, showing that the majority of them have, or the major ones have showed improvement, most notably Bank Dhofar and Dhofar Insurance. OIFC's decline is mainly driven by the changes in performance in their associate Bank Sahar. Financial services has moved into a loss in the first half of this year, a minor loss, which we hope will be more than recovered by the end of the year. Whereas the smaller associate of Salala Medicals is getting, the contracts entered into during COVID times are finally maturing, and so the gross margins are going back to historical levels. DFI is showing the turnaround performance we were hoping to see, and so as opposed to a loss of 305,000 in the first half of last year, we have seen a profit of 406,000 in the first half of this year. The increase in expenses by 19% is mostly related to the fees paid for the merger and the other related expenses, a brokerage on sale of shares, as we had made an exit in March of a certain holding, and also reflects the annual increase in salary expense. With respect to balance sheet, in line with the improved profitability of our associates, we see an increase in the value of associates on our books by about 2%, whereas the investment in equities, as a result of the improvement in market prices, have grown by 5%. Total debt has gone down by 1% as a result of the repayment, and the increased profitability is reflected in our increased equity that has gone up by 5%, closing at close to 141 million. A few slides on the performance of our major associates. So we continue to see a declining net income margin, net interest margins in banks as a result of the interest rate movement. So there's a slight decline in net interest income in Bank Dhofar of 3%, but the fees and commissions have shown a significant improvement of 27%, continuing the trend we have seen over the past few years, noting that this has become an area of focus for the bank. And a lot of investment and efforts are going into beefing up that business. The net result has been an increase in profits of about 7%. We also see increases on the balance sheet side as well, with a 12% increase in loans and advances, and an 11% increase in deposits for customers. With respect to Dhofar Insurance, we see the insurance revenue growing at the general economy growth rate of about 3%. Significant improvement in net investment income, driven by their investments in the market and their investment in DFI as well, that has shown a turnaround as discussed, resulting in a 9% increase in profits on a year-to-year basis. OIFC, as we can see, the revenue from operations has witnessed a slight decline of about 4%. While staff cost has gone down, staff cost obviously in OIFC is in many cases linked to the revenue from operations itself. So as contracts mature, some staff are let go with the contract, and so we usually like to see that in line. The drop in profits, as we have mentioned, is generally as a result of the decline of profits of Bank Suhat, which are a significant contributor to the profitability of OIFC as a whole. And that decline has resulted in a 35% decline in profits after tax. That is also impacted, obviously, by the increased borrowings of OIFC on a year-to-year basis, where they have grown by about 25 million riyal. Those borrowings increase as a result of the OIFC's continued maintaining its investment stake in Bank Suhat. And so funding to participate in the successive rights issues has resulted in an increase in the overall borrowing of the company. But that is also reflected in the increase in the value of the investment in associate as well. Net result has been an increase in shareholders' equity of 14% on a year-to-year basis. Just a representation of how our own shareholders' equity and long-term borrowings have moved over the past few years. So as you can see, our equity has increased from 53.4 million in 2019 up to 140.6 million in the first half of 25, while our long-term borrowings have declined from 115 million in 2019 down to 77.5 billion in the first half of 25, resulting in the debt-equity ratio improvement from 2.15 to 1 in 2019 all the way down to 0.55 to 1 as of 30th of June. Thank you very much. We have followed the same standard and the same template for the presentation this time around, despite obviously becoming a different company as of the 1st of July. However, since this presentation is geared towards presenting our financial performance for the first half of the year, we have chosen to focus on that financial performance in this presentation, but are open to any questions from the crowd.
السلام عليكم.
سلام.
كيف الحال؟ تمام إن شاء الله.
أهلا وسهلا حبيبي.
الله يسلمك. So now the company is a different company from 1st of July.
That is true.
You have also new.
Sorry,
you also have a new management on board as well. I think you have a different structure now, isn't it? So now what's next for? Sorry.
Sorry, تفضل. بس عشان نسجل our notes. Who am I speaking to? بس عفوا sorry. I should have asked.
علي.
نعم علي, أهلا وسهلا فيك.
حياك الله أستاذي. الله يسلمك. Yeah, so you have a new management as well on board as well. So the company is kind of going through a different structure now. So what's next for DIDIC, if we may know?
I mean, the company obviously has become a very different animal as of the 1st of July. Just to give you an example, for example, while up to the 30th of June, Dhofar Insurance, DFI, are associates as of taking the other holdings into account held by OIFC. So we know for a fact that Dhofar Insurance will become a subsidiary in our next reporting. So you will see a material difference in the way our financial reports are issued. But in terms of the internal restructuring of the group, unfortunately, while the merger has been delayed due to the legal action that was taken by minority shareholders, our downstream plans for the group have not changed. So we will be looking right now, the initial focus really is on working on the debt side of the company. As you can see, our combined debt is slightly south of 200 million. And so we believe that getting all of that debt repackaged, so to speak, to align with the vision of the group moving forward is an essential task. So that is something that we're working on. With respect to the integration of the two working groups, you're right, there is a change in structure. However, the bulk of the employees in OIFC actually sit in the operations, right, not at the parent company level. So the operations teams in OIFC are unaffected. They remain as they are. They continue to work exactly as they have worked. We're currently working on the integration of the head office people. So as the announcement that was made recently showed, Mr. Saeed Safrar has assumed the role of CEO of DIDIC. I have become the deputy CEO. We're currently working on realigning all of the staff beneath us, and that is a work in progress, but nearing completion. Down the line, we look forward to announcing at the right time what the strategic actions are, but given the significant ownership we have in banks, given our exposure to the insurance sector and the significant contribution of that sector into our financials moving forward, there will be some very interesting downstream activities that we will hope to announce to the market as they mature. Right now, we're working on updating all of these activities and the timelines associated with them, looking at the right kind of advisors that we will bring in to actually assist us in doing that work. And that will be presented to the board soon for their approval for moving ahead. Right now, to be honest, obviously, a PPA exercise is taking place, accounts integration are taking place, IT integration is taking place. So we do have our hands full for the remainder of the year, just making sure that everything is set up the way it needs to be set up.
Great. I think you have a busy road ahead.
Alhamdulillah, being busy is better than not. Yeah, alhamdulillah.
Absolutely. Okay, so in terms of shareholders and people like us, so what's next for us? I mean, you guys have been, the last dividends was, I think, 2024, 2.5% cash, you know. Before that, there was a kind of a period of no dividends at all. So for us, what does that all mean? I would like to understand.
I mean, obviously, DIDIC had gone through a difficult period in the past. And as you saw, our debts were close to 115 million in 2019. And when I came on board a year after that, the focus really was to bring down the debt. As you're aware, there was a debt restructuring that happened in 2019, where a restriction on dividends was imposed by lenders on the company for a period of 5 years. So our ability to pay dividends under that structure where it was non-existent. So obviously, once we were able to refinance the debt the first time around, we left the room for dividends to be paid. Alhamdulillah, we were able to pay that one dividend. It wasn't a major dividend, but at least it was a resumption of dividends. Last year, obviously, the change in the last-minute change in the dividends expectations to be received from Bank Dhofar had an impact on our own cash flow planning, and so out of caution, we held back from paying a dividend. However, moving ahead, paying dividends to shareholders is a priority. It's something that the market expects, and that is one of the main targets that we are including in our discussions in terms of repackaging the debt that we're doing right now, to leave that flexibility open. Inshallah, the company will resume dividend payments. We cannot quantify it just yet because our dividend ability, our paying ability depends a lot on the operations of our investee companies. So as we get more clarity on that, hopefully we'll be able to set that expectation. But in terms of intention, I think you can all rest assured that our intention is to resume regular dividend payments to shareholders.
Yes, great. I think especially now OFC's, I think fully now the merger is gone ahead. So also, OFC's dividends is also going to be part of your total, capabilities as well, isn't it?
Exactly.
Do we expect some also disposals or major kind of, restructuring of your, ownership of, investees and subsidiaries and associates? Yeah. Do we expect that?
Yes, I mean, I would not want to highlight any specific targets, but at the end of the day, our strategy moving forward will be more of, I mean, it's not that it's changing significantly. We are investors at the end of the day. I mean, while we do follow a value investment approach and we prefer a buy and hold model to a high frequency trading kind of approach, but we're not emotionally or attached to any investment in that we have to hold it. I mean, so whenever we do get a good opportunity to exit an investment, we will pursue that opportunity. The reality is the overall yield on our investment portfolio will have to increase to both allow for proper dividends to shareholders and to allow for a gradual repayment of debt, because we need to do the two things in tandem. So the rebalancing of the portfolio is an essential task that will have to be taken. and we are setting ourselves up so that we can achieve that target. Now, obviously, this will be a gradual plan, noting how concentrated our investments are for the time being. So it will not be a one shot where we turn over 50% of our portfolio or something like that in a quarter. I mean, that's not realistic, but yes, you will be seeing changes in our overall structure on the asset side moving forward. That's for sure.
طيب مشهور عزيزي الله يسلمك.
And if anybody has any other questions, I'm trying to be as transparent as possible, obviously, but I mean, I apologize if some information is not as transparent as you would like it to be. I know that a large group of shareholders have joined the DIC and they're keen to hear about our plans. But these are significant plans moving forward, and we are building them up in a rational and cautious approach. But inshallah, we will ensure that our investor relations function has been beefed up. We're beefing that up as well to allow communication with shareholders to be regular and provide the proper guidance to shareholders moving forward. If nobody else has any questions, I thank you, gentlemen and ladies. If there's anybody there, thank you very much for participating. I look forward to seeing you in the next MSX discussion, which will be very different to this one. And hopefully by the time that comes around, we will be able to, in the cooperation with our new CEO, present much more details on our plans moving forward. Thank you.
Thank you.